So, Mike, I know here at the Cash Flow Company, we've talked a few times about DSCR, but I don't recall if we've talked specifically about the credit score, requirements for DSCR and how credit score works with DSCR. Could you tell me a little bit about that?
I know we've talked about it once or twice, but it's important to go through because, this is a business. Investing is a business. Credit scores are one of the biggest impacts on your business as far as lending. We wanted to go through that today, the impact of your credit score on your DSCR, how it affects your LTV, your monthly cash flow, how it impacts you even being able to get deals. All of these things are impacted by your credit score. So let's go through and see how a good credit score can help you or a bad credit score can make it harder for you to be an investor.
That sounds great. I know that with DSCR, the part that I'm always like, what's the catch? Is the fact that income doesn't matter. You don't need to have your taxes for your income.
Personal and business income does not matter. It's the income of the property they look at. So it's like three parts: income, loan to value, how much you're borrowing against the property, and your credit score. Those are the three main factors. And the biggest reason why credit score is involved is underwriting is all electronic now. I mean, you put it into a computer, it comes through and it says, here's what you're approved for or not. And credit score is just one of the items that this particular product relies heavily on. So the better your credit score, the more it's going to impact you on your ability to get a DSCR loan. But not only that, but your cash flow. So people with good credit, it's going to be easier for them to attain. Their cash flow is going to be better. They put less down. All of these things to make it easier for them, where low credit scores just make it harder for some people to get in and make a property cash flow. All of these items, like I said before, this is a business, and credit scores are one of your biggest advantages when you're talking about borrowing. This is real estate investing. We rely heavily on leverage, which means you're borrowing other people's money to buy properties to make and create wealth. But credit score is one of the biggest items that everyone can either make it work for them or not. Credit score doesn't matter what your education is, how much money you make, where your family comes from. Credit score, everyone could work and get a good credit score.
Yeah. And I know that you also have the credit score 911 loans. So if people don't need to be like, well, this is totally going to keep me from getting a DSCR loan, like there are options, right? If you need them.
There's many options
to improve your credit score.
There's many options to put this tool to work, which is your credit score. We're just talking about DSCR and credit scores, the impact. If we go through the impacts, we say this is investing. So cash flow is the first thing it impacts. The better the credit score, the lower the rate. The lower the rate, that means you're paying less out every month, which means you're keeping more. So the people with good credit, their properties either cash flow more or they could get into properties that other people can't because their credit score gets you a lower rate. Lower rate means lower payment, which means there's more for you to keep.
Yeah. And more likely that you'll be approved for the loan, right? Since DSCR is based on whether or not the property cash flows. So if your rate is lower, then it's more likely the property is going to cash flow.
And that's one of the points I was going to go through is it's easier to qualify it. And here's an example.
Oh, sorry, jumping ahead.
No, that's right. We were talking about getting approved for a loan and why some credit scores matter if you get approved or not. I just put together a simple example of a property where the loan amount is $250,000. And we use the same on taxes, which is $150 a month, and insurance at $150 a month. With someone with a good credit score, and we talk about good credit scores, we're talking in the mid to high 700s. And when we're talking about a credit score that's not so good, anything below 680, so like 679, that 1 point between 679 and 680 means a big difference in this business. But if we look at these numbers here, if you're at a good credit score and you're getting a 30-year fixed, let's just say it's 7.375, mortgage payment is $1,727. And remember, we said $150 for taxes, $150 for insurance. Those are going to stay the same. So those total about $2,027. Let's just say this property brings in monthly rent of $2,100. So someone with a good credit score, the rents cover your expenses because it's $2,100 for the rents. It's a little over $2,000 for the expenses. So the rents are greater than the expenses. But let's say that same property with someone who does not have good credit score, maybe in the 660s, and their rate goes from 7.375 up to example of 8.75. Now your payments go from $1,727 to $1,967. Add in your $300 for the taxes and insurance, $150 each. Now your total payments are $2,267. Rents were $2,100. Now this is a negative cash flowing property. The only thing we changed was a credit score. Someone with a good credit score and someone with not a good credit score.
Gotcha. The difference between being approved for this DSCR and not.
Yeah, it's a difference of approximately $250 a month cash flow in one property just by working on your credit score. That's why we say credit scores are important and they impact you on your cash flow. But it also, as you mentioned your approvals. This loan would not get approved on a typical DSCR loans. Yes, there's options for this, but it's going to impact the next thing that we're going to talk about, which is your LTV of your loan.
Before we get to LTV, where can people go to learn more about this?
Check us out. We have some great information here on our YouTube channel, but also you could look at some of the tools we have and the information, the blogs on the cashflowcompany.com.
Okay, so tell me about LTVs, loan to value, right?
Loan to value. So this depends on if you're doing a purchase, how much do you have to put in to the property? If you're doing a purchase with good credit, you can get in with 15 to 20%. If your credit score is not so good, you may have to put in 25%. Some people with credit scores that are in the low 600s may have to put down 30%. So if you're buying properties and you have a limited amount of money saved, put away, if someone's putting in 10% more, let's just say it's a $300,000 purchase. Someone with not good credit is putting in, let's just say 5% more, that's $15,000, 10% more, that's $30,000. You're limited on how many properties you could buy because of how much you have to put into each property with your credit score. Because the lower the credit score, the lower your loan to value on your purchases. It also means if you're trying to refinance, get some cash out, pay off something else, you're going to get a lower loan to value. We just saw a person we're helping who was getting a DSCR loan. And just because of her credit score, she went from an 80% to 70% LTV. Now, instead of getting some money that she could cash out, now she has to bring in $45,000. That's just all based on her credit score. The appraisal was good. The income was good. It was all based on her credit score taking a hit.
Wow.
You talk about 911 loans. It was one of those things where using too much personal credit brought her score way down and impacted her ability to get the loan to value she was looking for. So we went through cash flow, loan to value, and approval. But the other thing is options. The people with good credit scores have people competing for their business, which typically means lower cost for them. 2 or 3 people want their business because it's an easy loan. Maybe they shave off a half a point or a point on their origination. They're going to pay less typically because you have more people competing. The people with low credit, that's a harder loan to do, you're going to have less options and people will typically charge you more for those loans. So with a good credit score, you're opening up different options. You're opening up people competing for your business. With that means you're going to have typically lower rates, which means your cash flow is going to get better. Higher loan to values. I mean, this all makes investing easier for you as an investor based on just one thing that anybody could do.
And what is that one thing?
Get your credit score to a point where lenders are attracted to you, which is typically in the mid to high 700s. It's just managing your credit, managing what you put on your credit. Like DSCR loans are not going to show up on your credit. Typically, I've never seen that happen. So the more of these business type loans with business credit cards we've talked about before, don't use personal credit cards in your business because it just impacts your score. So anything that we could do to increase our score makes investing easier, more profitable. Talking about easier to get a loan. When you have a better credit score, they ask for less. Underwriters don't care for as much backup if you have a better credit score, less reserves, all these kind of things that come with better credit scores.
It's like dating for lending, but instead of worrying about looking really good, the way to look good to a lender is to have a really good credit score.
Exactly.
That's how you're going to have people competing for your business.
You're looking at income from the property. You're looking at LTV. You're looking at credit score. Credit score is like a third of what they're looking at. And it's something that everyone can take care of. You can't control the rents in the area. And sometimes you can or cannot control how much money you have to put down. But with the right focus, you can get your credit score up and just make everything a little bit easier on what you're doing.
Awesome. Is there like a specific tool that you have on your website that people can look at?
Yeah, credit scores are so important on our website, thecashflowcompany.com. You can go to tools. You can download our credit score checklist. Easy ways to help your credit score, to look at those things. We've talked about business credit cards. There's some information on there too. So go to thecashflowcompany.com and you can use those tools to help your score.
Nice. So that's thecashflowcompany.com. I think there's a drop down for tools, right? And then there's the credit score checklist there.
Yep, exactly.
Awesome. Thanks, Mike.
Yep, thanks, Michael.